In this video, we'll break down two AI stocks that could surge as much as 62% as smart money quietly positions itself ahead of the next major wave in artificial intelligence. You're about to see why these companies are not just riding the AI trend, but helping build the very foundation that makes it possible. We're talking about businesses deeply embedded in global infrastructure, with the kind of scale, influence, and long-term relevance that can compound investor wealth for years. The first company is not flashy. It is not the headline-grabbing AI darling everyone talks about, but it might be one of the most important pieces of the entire AI ecosystem. We're talking about Intel, ticker symbol INTC. Intel sits at the center of one of the most critical layers of the modern digital economy. Every AI model, every data center, every cloud workload ultimately depends on compute power. And Intel has spent decades building the infrastructure that powers that compute. But here is where things get interesting. For years, Intel was seen as falling behind. Competitors were gaining ground. The narrative shifted from dominance to decline, and that is exactly why this opportunity exists today. Because while the market focused on what Intel used to be, something else has been quietly happening behind the scenes. Intel has been rebuilding. The company is executing one of the most aggressive turnarounds in semiconductor history. It is investing heavily in advanced manufacturing, expanding its foundry business, and repositioning itself as a critical supplier in the global AI race. And when you step back and look at the big picture, this is not just a turnaround story. It is a strategic reset aligned perfectly with the future of AI. Let's break down why that matters. Artificial intelligence is not just about software, it is about hardware. Training large AI models requires massive computational power. Running those models at scale requires efficient, high-performance chips. And as AI adoption explodes across industries, demand for this infrastructure is only going to increase. Intel is positioning itself to capture that demand from multiple angles. First, its data center and AI segment is directly tied to enterprise and cloud computing growth. As companies deploy more AI workloads, they need more servers, more processors, and more optimized systems. Second, Intel is pushing into AI accelerators and specialized chips designed specifically for machine learning tasks. These products are critical as AI becomes more complex and more widely adopted. Third, and perhaps most importantly, Intel is building out its foundry services. This means manufacturing chips not just for itself, but for other companies. In a world where semiconductor supply chains are becoming increasingly strategic, this positions Intel as a key player in global technology infrastructure. Now here is where the numbers start to align with the story. A Wall Street analyst sees significant upside in Intel's stock, projecting gains that could reach roughly 35% from current levels. That kind of projection is not based on hype. It reflects expectations around improving execution, expanding margins, and growing demand tied to AI. And when you look at Intel's recent financial trajectory, you can start to see the early signs of this shift. Revenue has been stabilizing after a challenging period, cost-cutting measures are improving efficiency, and investments in next-generation manufacturing are setting the stage for long-term growth. But what makes this even more compelling is valuation. Intel is not priced like a high-growth AI stock. It is priced like a company still proving itself. That creates a disconnect between where the business is today and where it could be in the future. This is where smart money tends to step in. Institutional investors often look for situations where the narrative is lagging reality, where the market has not fully priced in a company's turnaround or growth potential. Intel fits that profile. And if the company continues to execute on its strategy, that gap between perception and reality could close quickly. Now let's talk about risk, because no investment is without it. Intel is operating in one of the most competitive industries in the world. Execution matters. Delays in manufacturing, product missteps, or failure to gain traction in key markets could slow down the recovery. But that is also what creates the opportunity. The market is already factoring in a level of uncertainty. And if Intel simply delivers on its roadmap, the upside could be significant. So when you combine a massive total addressable market, a strategic repositioning around AI, improving financial performance, and a valuation that still reflects skepticism, you start to see why this stock is on the radar of serious investors. Intel is not the obvious AI play, it is the foundational one. And sometimes, those are the opportunities that deliver the biggest returns. If this resonates with you, you're exactly who this channel is for. Please hit the like button, share the video, and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. Remember to do your own research before you invest in any stock. Now let's move to the second stock, and this is where the story shifts from a turnaround narrative to a full-blown AI demand explosion. We're talking about Micron Technology, ticker symbol MU. If Intel is the backbone of compute, Micron is the lifeblood of AI memory. Every single AI model, whether it is training massive datasets or running real-time inference, relies heavily on memory. Not just any memory, but high-performance, high-bandwidth memory that can keep up with the speed and complexity of modern AI workloads. And this is where Micron becomes incredibly important, because without memory, AI simply does not function. Think about it like this. Compute is the engine, but memory is the fuel system. You can build the most powerful processor in the world, but without fast and efficient memory feeding it data, performance collapses. This is why demand for advanced memory solutions is exploding right now, and Micron is one of the few companies in the world capable of supplying it at scale. The company specializes in DEE-RAM and NAND memory, both of which are essential components in data centers, cloud infrastructure, and AI systems. But what is really driving excitement is Micron's position in high-bandwidth memory, often referred to as HBM. HBM is critical for AI accelerators. It allows data to move faster between memory and processors, dramatically improving performance for machine learning tasks. And demand for HBM is not just growing, it is accelerating at a pace the industry has rarely seen. Micron has been aggressively ramping up its production of HBM to meet this surge, and as supply remains tight across the industry, pricing power starts to shift in favor of producers. That is where things get very interesting from an investment perspective, because when you combine rising demand with constrained supply, margins can expand rapidly. And that is exactly what analysts are starting to price in. One Wall Street analyst projects that Micron stock could surge as much as 62%. That is a massive upside target, and it reflects expectations around both revenue growth and margin expansion driven by AI demand. Now let's dig deeper into why that projection is not just hype. Micron operates in a cyclical industry. Memory prices rise and fall based on supply and demand. In the past, this has created volatility in earnings and stock performance. But AI is changing that cycle. We are entering a phase where demand is not just tied to consumer devices like smartphones and PCs. It is being driven by large-scale infrastructure investments in AI data centers. These are long-term, capital-intensive projects. And once companies commit to building out AI capabilities, they need a steady and growing supply of memory. This creates a more durable demand profile. Micron is already seeing this shift play out. The company has indicated strong demand for its high-value products, particularly in data center and AI applications. As production ramps and pricing improves, revenue growth could accelerate significantly. And because advanced memory products like HBM carry higher margins, profitability could expand even faster than revenue. This is where operating leverage comes into play. When a company's fixed costs remain relatively stable while revenue increases, a larger portion of each additional dollar flows to the bottom line. For Micron, that means earnings could scale rapidly as AI demand continues to rise. Now let's talk about valuation. Despite this massive growth potential, Micron is not priced like a hyper-growth AI stock. It still reflects some of the traditional concerns around cyclicality. But if AI demand continues to reshape the memory market, those concerns may start to fade. And when that happens, the market could begin to re-rate the stock. That re-rating is often where the biggest gains happen. It is not just about earnings growth. It is about changing perception. When investors shift from viewing a company as cyclical to seeing it as a structural growth story, valuation multiples expand, and that can drive outsized returns. Now, of course, there are risks. Memory markets can be volatile. Supply can increase faster than expected. Pricing can fluctuate, and global economic conditions can impact demand. But the key difference today is the scale and urgency of AI investment. We are not talking about incremental upgrades. We are talking about a technological shift that is driving massive capital deployment across industries, and memory sits right at the center of that shift. Micron is not just participating in the AI boom, it is enabling it. And when you combine that strategic position with rising demand, improving margins, and a potential 62% upside target, you start to see why smart money is paying attention. Now here is something most investors overlook. The biggest gains often come from companies that are essential but underappreciated. Micron does not always dominate headlines. It is not the most talked about AI stock, but it is one of the most critical. And that creates opportunity, because when the market eventually catches up to the importance of memory and AI, stocks like Micron can move very quickly. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Now that you've seen both sides of this opportunity, it's time to connect the dots. Because the real edge is not just knowing these two companies, it is understanding how they fit together in the bigger picture of AI. On one side, you have Intel rebuilding itself as a core compute and manufacturing powerhouse, a company that is positioning itself to supply the infrastructure that powers AI at scale. On the other side, you have Micron Technology sitting at the center of one of the most explosive demand trends in tech, supplying the memory that makes AI systems actually work. One is a strategic turnaround with improving fundamentals and a potential 35% upside. The other is a high-conviction growth story tied directly to surging AI demand, with projections pointing to as much as 62% upside. But here is where things get really interesting. These are not competing ideas, they are complementary. Every AI system needs both compute and memory. You cannot have one without the other. As AI adoption accelerates, demand for both will rise together. This creates a powerful dynamic for investors. Instead of trying to pick a single winner, you are positioning yourself across two critical layers of the AI stack. This is exactly how smart money tends to think. Not in terms of isolated bets, but in terms of ecosystems. When a major technological shift happens, the biggest opportunities are often found in the infrastructure that supports it. The companies that enable the trend, rather than just the ones that get the most attention. And that is what you are looking at here. Now let's take this one step further. Think about how capital flows during a technological cycle. In the early stages, money pours into the most visible names, the companies with the most hype, the most media coverage, the most excitement. But as the cycle matures, investors start looking deeper. They begin to ask questions like, who is actually supplying the components that make this possible? Who is generating consistent revenue from this trend? Who has pricing power as demand increases? That is when capital starts rotating into companies like Intel and Micron. And this is where timing matters, because by the time the broader market fully recognizes these opportunities, a large portion of the upside is often already gone. Right now, you are in that window where the story is developing, but not fully priced in. Intel is still proving its turnaround. Micron is still benefiting from early-stage AI-driven demand expansion. The narrative is forming, but it has not yet reached peak saturation, and that is exactly where asymmetric opportunities tend to exist. Now let's talk strategy. If you are thinking like a long-term investor, the goal is not to time every short-term move. It is to identify companies with durable advantages that can compound over time. For Intel, that means watching execution. Can the company continue to improve margins? Can it deliver on its manufacturing roadmap? Can it gain traction in its foundry business? If the answer to those questions is yes, then the current valuation could look very attractive in hindsight. For Micron, the focus is on demand and pricing. Is AI-driven demand for memory continuing to grow? Is supply remaining constrained enough to support higher pricing? Are margins expanding as higher-value products like HBM take a larger share of revenue? If those trends hold, the earnings potential could scale much faster than the market currently expects. Now here is a key insight. The biggest returns often come from inflection points, moments when a company transitions from one phase to another, from decline to growth, from cyclical to structural, from overlooked to essential. Intel is approaching an inflection point in its turnaround. Micron is approaching an inflection point in its growth cycle driven by AI. And when those inflection points align with a major technological shift like artificial intelligence, the results can be powerful. But let's ground this in reality. Not every projection will play out exactly as expected. Markets are unpredictable. Execution can vary. External factors can influence outcomes. That is why discipline matters, diversification matters, and doing your own research always matters. What you are looking for is not certainty. You are looking for probability. The probability that these companies are positioned to benefit from one of the most important technological shifts of our time. And based on everything we've discussed, that probability is increasing. Now let's zoom out one final time. Artificial intelligence is not a short-term trend. It is a long-term transformation. It is changing how businesses operate, how data is processed, how decisions are made, and how value is created. And at the heart of this transformation are the companies building the infrastructure that makes it all possible. Intel and Micron are part of that foundation. They may not always be the loudest names in the room, but they are among the most important. And sometimes the most important opportunities are the ones hiding in plain sight. So here's the question you need to ask yourself. As AI continues to reshape the global economy, which type of company do you want to own? The one that captures attention today, or the one that quietly powers the future? If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the Stocks Galore Patreon today and take your investing game to the next level. Our members get full in-depth analysis on most of the stocks mentioned here. Head over to patreon.com/stocksgalore and become part of our growing community of smart investors. Link is in the description. Now I want to hear from you. Between Intel and Micron, which company do you believe has the stronger long-term advantage in the AI-driven economy, and why? Do not forget to like the video, share your thoughts in the comments, and subscribe so you do not miss the next important investing update. Thanks for watching, and I will see you in the next one.